Hello, everyone. Welcome back to WealthWise 2025. Can you believe it? It is week 35. And this week, we are going to be talking about fortifying wealth in the age of climate and cyber shocks. This week's focus is urgent, practical, and forward facing. How do you build financial resilience in the face of so much potential disruption? We are seeing climate disruption, cyber risks being actualized, and we need to understand how to approach that. When we think about it, we've covered down on a lot of this. Foresight and future fit finance in week 30. We explored collaborative wealth in week 31. We learned to blend AI speed with human judgment in weeks 32 and 33. And last week, we reframed money through abundance and regenerative economics. So today, we're bringing all those lessons together for a reality we can't ignore. Storms, fires, floods, and cyber attacks are no longer edge cases. They're wealth events. The main question for you and your business is, are you fragile or fortified? Why does this matter so much now? Well, let's set the stage with what we're seeing in 2025 thus far in the climate area. Billion, yes, it's a billion-dollar weather disasters are striking more often everywhere across the world, hitting real estate values, insurance markets, and most of all, the small business continuity. Cyber, still with the ransomware, phishing, and now these deep fake frauds, which are emptying accounts and halting operations overnight. Well, regulators, they're scrambling. Insurers, a massive pullback. And markets, well, they're whipsawing their way through these crises as they unfold. And yet, our financial resilience doesn't depend on waiting for policy fixes. It depends on how you design your wealth systems now. So our key insight for this session is resilience is not just about defense. Done well, it turns risks into advantages and new opportunities. Line for the day, your best defense is a great offense. Go long. Part 1, the climate and cyber wealth test. Let's run a quick thought experiment. Can you imagine tomorrow when your region might face a climate shock, another wildfire, another flood, a hurricane, or perhaps a cyber event, a major breach, ransomware, or I hope this really doesn't come to pass, a 10-day internet outage? Let's be real. Would your wealth design hold if these were to come to fruition? Or would it crack? So here are 4 exposures for us to discover and remediate before we need to. Asset fragility. Too much wealth tied to one vulnerable geography or asset class. For example, beachfront property in hurricane zones, or having everything in one employer stock. Remember, diversification is your friend, as well as being directly applied to a strong risk management framework. Number 2, insurance gaps. Are your policies up to date? Do they include cyber, flood, or perhaps wildfire risks? Number 3, digital vulnerability. Do you have strong password hygiene? Do you have account protection? And last of all, do you have a backup and restore strategy in place and tested? Number 4, liquidity buffer. Can you access cash for or in 72 hours if the systems are down? If you had 10 minutes right now, which of those 4 is your greatest, weakest link? Write it down, because this test isn't about panic, it's about clarity. You can't fortify what your blind spot is. So think about it, understand how you can remediate and put that action plan into moving forward this week. So let's look at our resilience portfolio, because we really need to build that for 2025 and beyond. Here are 5 pillars you can start implementing this quarter. Number 1, a resilience fund. So this gives you both defense and optionality, not just 6 to 12 months of liquidity, but fast access instruments. Perhaps that looks like money market funds, T-bill ladders, or insured digital wallets. This buys time to help you make smart, not forced decisions. Number 2, risk spreading assets, because we need to diversify beyond fragile geographies. Think global green infrastructure funds, sustainable timber ETFs, or climate resilient REITs. You want to spread exposure across different regions and industry to heighten your maximum ROI. And again, protect against all of your eggs in one basket. Number 3, cyber protected capital. Harden your financial ecosystems. Use encrypted password managers. Focus on ensuring at minimum 2-factor authentication. Put in place cyber insurance riders. And lastly, create a digital estate planning approach. One breach should not erase decades of disciplined growth, scale, and savings. Number 4, learning and network capital. Wealth isn't just about money, it's skills, knowledge, and relationships. Build up your cyber literacy, learn disaster basics, and cultivate your peer financial circles. When disruption hits, your human capital is oftentimes your fastest recovery tool. And last, number 5, optionality assets. Hold assets that open doors under pressure, side hustles, skills-based consulting, or regenerative income streams like distributed energy, because optionality equals resilience. Which one of these 5 pillars do you already have in place? Any? And alternatively, which one might need your most urgent attention? So we need to move from fragility to optionality, because resiliency isn't about hiding. It's about reframing potential disruptive occurrences and events into opportunity. For example, distributed energy can invest in solar or microgrids, because it doesn't just hedge against blackouts, it creates extra long-term yield. Cyber upskilling. Taking a cybersecurity basics course isn't just protection, it makes you more marketable in a digital-first economy. And peer finance circles, because sharing risk and capital builds both redundancy and faster recovery pathways. Here's the shift. Scarcity mindset says, protect what I have. An abundance and resilient mindset says, turn risks into new cash flows. That's how you move from fragility to optionality. So what is the WealthWise drill? Well, here it is, your wealth resilience drill for this week. 1, a scenario sprint. Imagine there is, again, wishing this on no one, a 10-day outage, no power, no internet, no anything. How do you access cash? How do you continue to work? And how do you protect your assets? Number 2, policy scam. Review your insurance mechanisms. Are there exclusions? Are you covered for floods? Do you have a cyber rider? Are you covered for business interruption? Make sure you have the right riders and policy language in place for what you need. Number 3, digital hygiene audit. Change weak passwords. Check your two-factor authentication and verify your backup and restore systems. And lastly, create a resilience journal. Capture the local signals or global, local climate events, regional cyber breaches, and note down how they intersect with your wealth. You need to understand what surprised you most about that, because that's likely where your blind spots are. What fragility did you uncover, and what do you need to remediate to be able to move to strong optionality? So our challenge for week 35, should you choose to accept it, run your wealth resilience drill. Identify one area of fragility and design a mini resilience plan. Share your insight with a peer or accountability partner, and don't forget to post your move at hashtag WealthWise2025. What fragility did you uncover? And 2, what steps are you taking to further fortify your wealth? Remember, accountability multiplies resilience. So in closing, here's the takeaway. Climate and cyber shocks are no longer side stories. They're wealth stories. The leaders who thrive in this new era won't be the ones who deny that there's risk. They'll be the ones who design resilience as a key advantage. So this week, don't just prepare for the storm. Build so well that the storm makes you stronger. Again, I'm Dr. Rhonda Farrell, your success strategist, and this has been week 35 of WealthWise 2025. Join me next week for week 36, where we'll explore longevity economics and the rise of 100-year wealth planning, because resilience today should flow into prosperity tomorrow. Until then, stay resilient, stay abundant, and stay wealth wise.